Hi, and welcome to this week's edition of Macro Minutes, the 18th of June. Start with a disclosure statement as per usual. The information summarised in this webinar does not constitute financial or professional advice. It is general in nature, does not take into account your specific circumstances and should not be acted upon without the full understanding of your current situation, future goals and objectives. Rightio, stocks in our universe. We've got JLG, Tyro and Suncorp. So JLG on the 10th, John Ling Group provided an earnings update for the financial year due to strong demand for the core business as usual services and a significant increase in catastrophe recovery activity in this year, financial year. Forecast EBITDA has been revised up to 52.1 million, up 10% on earlier guidance in February, representing a 36% year-on-year EBITDA growth in business as usual, 27% in the catastrophe activity stuff as well. As the price of raw materials such as lumber and steel rise, a systematic decline in construction activity can be expected going forward, as IB&RS division of JLG accounts for roughly 80% of JLG's revenue. A decline in this segment will be materially harmful, although we have had a fair pullback in commodities in the last 48 hours. I think the CRB index, which is the commodities index, has pulled back pretty much in 2 days what we've gained in the entire calendar year so far. So we're seeing those pressures at least dissipate, particularly copper's off about nearly 10%, and lumber's come off quite considerably as well as steel. So that may be dissipating that risk there, just particularly in the last couple of days. Next up, we've got Tyro. So Tyro reported their weekly transaction updates. 574 million transactions were made through Tyro FPOS machines in the past week. They're the largest provider of FPOS and payments and business-only banking solutions. For the weekend at 11th of June, transaction value shot up 15.26%, a record calendar year gain of 15% compared to the prior week, with the easing COVID restrictions in Melbourne aiding performance. They closed yesterday around about 3.95. Trading department actually had a recommendation on those guys literally like 7 odd trading sessions ago. We were buying at 350 to 360. So there's been a decent gain there. There is very heavy volume at $4 on the offer side, which has been there for a few months now. I dare say once we see that volume trade through, this stock really would look quite, could go on a bit of a run. But for trading clients, we've essentially been we've been trimming out just below that $4 mark, and for a small amount, and then trying to ride the rest up, as that seems to be trading in a nice little trend channel, that thing. So, but overall, the business is going from what I've seen is going particularly well, and but there is that strong resistance there at $4 for the time being. Next, we move on to Suncorp. They reported a claims update following the catastrophic damage caused by the severe weather and floods in Victoria. As of the 15th, Suncorp received approximately 3,750 claims, mainly for property damage. This is expected to be higher as the severe weather unfolds, but more rain expected in the week following. So from the start of the year, 31st May 2021, from the start of the year to the 31st of May 2021, Suncorp has incurred 955 million in claims, 40 more than year-to-date allowance, which is obviously not very good. Suncorp's reinsurance cover caps the max loss from this event at 50 million. So insurance companies, as per usual, are very tricky, and as a lot of people have, good analysts have mentioned, that they're not really factoring in the severe weather changes coming from climate change well enough or aggressively enough at this stage. So a lot of good analysts are avoiding the insurance sector until they get that sorted out. So now, next up, we've got stocks to watch out for. Okay, we've got OZZ. OZZ Resources will be raising 5 mil through the issue of shares at an offer price of 0.2 cents. Sorry. On the 21st of June, AZZ is a resources gold and base metals explorer operating in highly prospective regions in Western Australia. The equity raise aims to begin a multi-pronged exploration program in the second half of 2021 with drilling approvals already in place for Maguire's Reward, where 500 million of reverse circulation drilling will begin next month. The IPO is expected to bring 5 Western Australian gold projects to the market. The IPO will provide investors with exposure to gold, copper, nickel and cobalt, which their timing is not particularly good considering gold has dropped from 1900 to nearly 1700 in the last 2 days. And copper's pulled back quite considerably, but so I don't expect that one to be bought heavily market and open, I wouldn't have thought. Next one we got is Premier Investments. They'll be going ex-dividend on the 23rd of June and will pay a 34% per share dividend on the 29th of July. They operate in 2 segments, retail and investments. The retail segment consists of Just Jeans, JJ's, Jackie E, Portman's, Dotty, Peter Alexander, and Smiggle, which is distributed through the wholesale and online channels. Smiggle's their big one at the moment, with all the focus on it. So, they've expanded that in the UK recently as well. Through the acquisition of Australian companies, a particular focus on retailing, importing and distribution. Recently, the company announced a strong second half financial year 21 trading update, which saw sales for the first 18 weeks of the second half of 21 surged 70% versus the previous period. Looking ahead, the company expects 21 EBIT to be in the range of 340 to 360 million, which represents an 82 to 92% increase against the financial year 20 EBIT. Management has pointed to a strong customer demand for its winter product range and continued strength online as key drivers for the anticipated record 21 EBIT. Rightio, 29 Metals. So 29 Metals will be raising 528 million through an issue of shares at $2 on the 23rd at 4.8 times financial year EBITDA. Copper Miners prospectus has seen the company's prospectus grow from 524 million in 2018 to 658 million forecast in 21. It's worth as much as 2.14 billion on enterprise value basis on life of mine discounted cash flow model. It's owned by EMR Capital, which has been weighing up listing or trade sale. The equity raise aims to fund exploration and potential development of its flagship Golden Grove mine, retired debt and expand some working capital. This investment will provide investors with exposure to copper through a junior miner when it lists, and would be a potential rival to, say, Sandfire Resources. However, small mid-cap miners come with resource and mining extension risk, which could see stock values shift drastically. So everyone sort of knows the risks there with those smaller junior miners. Obviously with copper prices where they were 3 days ago, this was probably far more attractive. We should see those sorts of things settled. The structural shortage for copper and demand for copper for infrastructure projects, buildings, and electric vehicles is not going to dissipate, not going to die away. But we've just had China come out and basically release inventories in those precious metals areas to try and dampen commodity prices. So didn't really work with iron ore prices from China, so it's working at the moment in the metals. But we'll see how that pans out in the long run, I suppose. I don't really think, market manipulation, in my opinion, versus supply and demand. I don't think the manipulation ever really wins the battle there. So it could just be a dip buying opportunity, in my view. So looking ahead, next Monday we've got Australian retail sales. Data significant because it's the primary gauge of consumer spending, which accounts for the majority of overall economic activity. We did have yesterday Aussie unemployment numbers. They came out at an absolute whopping 115,000 jobs, 97,500 of which were full-time jobs. But most importantly, the unemployment rate dropped from 5.5 expected. It was at 5.1. So we're back where we were in February, just before the pandemic hit. And obviously more jobs have been added over that time. So extraordinarily strong numbers there for Australia. and I think that drove bond yields up about 10 basis points in the long end. So it's that sort of gauge of rate expectations. So yeah, we'd probably have to be looking out for the RBA's statement next month in early July. We've obviously next Thursday we've got OPEC, their biannual OPEC conference. As part of the conference, representatives from the member nations will discuss their outlook on oil and also decide how much oil they'll produce. The discussion is set to have a large impact on the oil market. So there's a few other things at play there, but we have had recently a range of analysts call oil back to $100. It's around about 70 at the moment. Although with this commodity pullback currently, oil's hanging in there. But if it is sustained, you may start to see a little bit of weakness in oil. But overall, it's been very bullish from a technical point of view, and I think there were some numbers I just read recently that this morning that the US population is driving 55% more over the last few months. So I dare say, oil may hang in there really. So next Thursday at 10:30, we'll also have US final GDP data for the March quarter. Although this will be the third and last of the March data releases, it's still relevant, but usually it's very much in line with expectations. So we won't be really expecting too much out of that. All right, well, thank you for attending the Macro Minutes on this 18th of June. Have a good weekend, and we'll chat again next week.